Hey, welcome everyone to pre-market prep. I was off on Friday, so we missed that, but we had a great weekly meetup last night. Big focus on macro. So let's go over what's going on this morning. Let me just quickly check if there's new news first. Okay, so here's what I got. First, I'm going to cover actually a couple news items on specific stocks, and then we'll get a bit into the macro, which we're at critical levels this morning, critical support levels on QQQ, ARKK, Apple. So we'll talk about all of those. First, CCAT, a little bit of news. They've been a PR machine lately with their Triller, who they're trying to acquire. So I always watch this anytime there's news like this. Hopefully we get a pop. I still have a nice core position in this, and I've been a seller in the 130s. So if we do somehow get a pop into the 130s, I'll be watching that today to either decrease my position in seek or sell covered calls on that. Deer is an interesting one that I'm putting up here because this has been a proxy for the ag sector, one of the biggest ag stocks, and you can see it's been doing great, but it's been slaughtered the last few days, and it got a downgrade this morning to a $450 price target. It's still way above where it is from 470 to 450. So that's something I'm going to be watching. I don't really have an opinion on this yet. Out of all the different sectors we talked about in the new fangs, fuel, agriculture, aerospace, nuclear, and gold, I think agriculture is going to be the most resilient because you're going to see less demand destruction in agriculture. So a little bit surprised to see such a sharp move down. Perhaps these are going to be buying opportunities in agriculture stocks. I'm sure the rest of the ag stocks may follow deer this morning. Something to look at. Energy, I talked about, I don't know, about 10 days ago or so that we got to start watching oil for signs of demand destruction and recession. Maybe that's what we're seeing this morning because as we'll go through everything in a second, but, with Netflix and how the rest of the NASDAQ's been acting after that, I really feel this is because people are preparing for a possible recession. And oil is one of those things that turns over when you have a recession. So something to consider. I'm actually out of almost all of my oil and gas positions. I sold 75% of my KMI. Was that right before, right after earnings? I don't remember, which turned out to work. Still have 25% left, but I really don't have any other oil and gas positions because of my worry of a recession. So before we get into that recession talk and the macro, let's talk about Twitter. Twitter, there are lots of reports out this morning that the board has warmed up to Elon Musk's offer and that they were talking yesterday and that a deal may be reached as early as today at the price. These are the rumors. We don't know. Could it be higher? Could it fall through? Of course, but the rumor is it will be at 54.20 as Musk offered. So you can see it gapping up above that 200 DMA this morning. I have a long position. I've been selling covered calls weekly on this. Half of my covered calls expired Friday, and I didn't have a chance to reload because I wasn't around, and that ended up being fortunate for me because now I can sell covered calls on the other half at much higher prices. So that's what I'm going to do here. I think without a firm deal in hand yet, and hopefully that's not going to happen before 9:30, you can see big premiums in Twitter calls of people speculating that there could be a buyout at a higher price. So I'm going to be looking at selling somewhere above $50 strikes, maybe up to $54, $55 strikes even. And I might even look further out, right? Because you can get more premium by selling several weeks or several months out. I even may look at leaps because if that deal does go through, I think you get to keep all those premiums on the long term calls. In fact, what will happen before the deal is actually closed, but once it's agreed to and the stock is still trading publicly, right? Let's assume for a second it's going to be a 54.20, so you'll see the stock go to like 53.85, right? Something like that, and it'll creep up slowly to 54.20 by the closing date. But as soon as they agree to that deal, all the premiums on the long-term calls will just collapse overnight, and you can make a huge profit. So I'm hoping that the market makers are leaving high premiums on those calls. As of Friday, the call options for way above 54 were still very high. So this is going to be an awesome opportunity for me and I think others to milk more out of the deal instead of just $54. You can get more out of it. Um, Now going to the macro picture, I really felt, and I've been vocal about this, that I thought Netflix missing was an early recession sign. And I'll say this again: I understand there are individual company issues at Netflix. I get that, but in a rosy economic environment, people will continue to keep services they don't really use. So the fact that they're cutting off services that maybe have less utility for them is an early recession sign. You'll start there and then it'll accelerate and people will, be tighter with their budgets on other items. That's how I look at it. And guess what? Look at the Qs. Uh, these three bars, 1, 2, 3, is right after the Netflix report. So I think the rest of the market is looking at it exactly the same way. And you don't see a lot of voices out there saying Netflix was a warning sign, but they're acting as if it was. All right. And that's what I think is going on here. So right after that Netflix report, I bought Apple puts and I'm up over 200% on them. Apple reports Thursday. It's at a critical, well, this morning it was right at the 200 DMA, which I think is 159.85, somewhere there, or maybe it was 158.95. I posted it on my Twitter and in the WhatsApp room. So you can check that level. It's somewhere around there, 159-ish. So critical level at the 200 DMA ahead of Apple earnings on Thursday. And yeah, I'm really of the mindset, as we talked last night, that this will break that 50 DMA and can have a lot lower downside, because I think, am I a little early? Maybe, but I think there's a decent chance that Apple will have to reduce guidance here. Not only because of demand issues, but also the supply chain issues and all the back orders and everything. So I think Apple is in a little bit of trouble. And you can see here, ARKK is at a critical level. 51.85 is the 52-week low. So for all those people saying, hey, ARKK has been outperforming NASDAQ recently, maybe in the last few days, it went down less than NASDAQ. But overall, we are now back exactly to that low right there. And that's not a pretty chart. And you can see QQQ 316 is the level over there. So all of these charts are pretty close to those lows. QQQ, SPY's the healthiest, but still it's getting close to that low. But you can see ARK is a leading indicator to me. ARK is a leading indicator of risk assets. And if this is if that breaks 51.85 and goes down, I think it's only a matter of time till the mega caps follow. Now, this morning we have where's the earnings? Hold on. I think it's Google and Microsoft tomorrow. Not sure. Let me see when Amazon is. I'm pretty sure Google and Microsoft is tomorrow, and Apple is Thursday. Let's see when Amazon is. Amazon is April 28th. Oh, that's this week too. I think they're all this week. Okay, so I don't know the exact times and everything, but this could be a very important week. Is it possible it's a little bit too early to show in the reports recessionary pressures and we get a relief rally? Yeah, it's possible. In that case, I would definitely look to take some off the table, because I think it'll come in the next report. But I think that they're going to see the signs. It's April here. They have data for this month. And I think this is the month people really started worrying about inflation. And that's why I think Netflix was guiding for losing 2 million subscribers this quarter. I think that data is starting to come through in April. And when they guide, I think this is going to be built in to possibly reduce guidance over at Google, with reduced ad revenue possibly for the balance of the year, and Apple. So I'm pretty worried about all this. The way I'm playing it, actually, I'm going to get into Kodak and CFEI in a second. But the way I'm playing this, because I am not really hedged for this, the only right move I did, honestly, was buy Apple puts. But I don't have any exposure right now to, for example, PSQ or RWM. I don't have anything like that. I'm a little bit overweight on individual stocks that I thought were going to outperform, which turned out not to be the case, including stocks like SMSI and Kodak. Pretty much everything is being thrown out with the bathwater right now. So how I'm going to play it, rather than like panicking and selling those stocks at really good valuations, I understand that they can still go lower. They can, no matter how cheap a stock is. When the rest of the market goes down, whatever stocks you like will still go down with it, whether it's whatever, VTSI, SMSI, Kodak, whatever, name any stock. Like stocks, maybe agriculture stocks are going to hold up. We'll see. Right. So the way I'm playing it is I'm going to be aggressively looking to sell covered calls. I already started this last week. I mean, I've been doing it on Twitter to get a little more profit out of this deal, but I've been doing it on Kodak. I'll be looking possibly to do it on SMSI, on CFVI. Every chance I get, especially on pops, I'm going to be looking to sell covered calls so I can generate income and reduce my cost basis, because I think it's going to be several more months for things to settle down. I really think the QQQ and SPY and Apple and Google, I think these stocks may have 20% more downside to them. Here's the 200-week moving average. So that's possibly the low end of my target here, is that 200-week moving average. And I don't think it's going to be a straight line down. It could take several months or quarters to reach there. So I think we're just at the beginning of the pain for the mega caps. And it's the question is, how's that going to impact the micro caps and the value companies, the growth companies, the ARK companies that have been hit really hard? And hopefully they'll find stability and start rebounding earlier than the rest of the market. But it's just a fact that when you have these liquidations happening, baby gets thrown out with the bathwater and cheap gets cheaper. So you got to start somehow preparing for that. I'm staying away from call options now. I did that a little bit more than a little bit the last month or so, and I got in trouble, especially with Kodak. So I'm staying away from options, stay away from margin, look for chances to sell premium. That's what I'm doing here. So, I don't have anything else except DRIO CEO is coming Wednesday, 3 p.m. Eastern for a StoryTrading VIP interview. It's not going to go on YouTube, so that's an exclusive inside talk. Obviously not inside information, but inside insights. Put together the puzzle pieces over there with the CEO of DRIO. That'll be Wednesday, 3 p.m. And Kodak, there was some new nuggets. I'm not going to share it on this video because this goes public out at 4 p.m. So our VIP members, we did go over on the weekly meetup last night some nice positive nuggets. But again, I did promise to go over this chart. I'm sorry. This is the 50 DMA. It's a critical support. 50 DMA is $5.50 on Kodak, right? Now, when you look at daily moving averages, what's important is the close, not the intraday action. So it's really important if this opens and it's set to open below 550, if somehow closes above 550, that'll be great. But at this point, baby gets thrown out with the bathwater. I wouldn't be surprised if it doesn't close above 550. And then where's support? All the daily move, now you can see that. It just printed it right there, right? That little dot there. But, all of these daily moving averages are way above. So where do you find the next level of support? Well, there's obvious support here at $5, which is previous resistance. But there might be another level just before it. So let me show you where I get that. When I lose the daily supports on the moving averages, I go to the weekly. So on the weekly, you can see the 20-week moving average is not much better than 5, right? It's like 505, 506, something like that, 507. Hey, it's possible that happens. I'm not going to panic. I'm not going to sell it and take a loss. I'm going to try to sell covered calls, which I've already actively been doing on Kodak to reduce my cost basis. So, guys, thanks for tuning in. And, not a lot of great news out there. You just got to manage your positions, manage your risk, do what you have to do in terms of getting out of margin, getting out of call options, and selling covered calls. Or if you need to sell specific stocks, I understand that. Some people need access to capital sooner and they can't wait it out. So it's a tough market, guys. All right. We'll talk in the chat rooms. Have a great day.